Hey, and welcome back to Mehmi Financial Group, the podcast and video series that turns complex financing into clear action for Canadian small to medium businesses. I'm your host, John Mehmi, and today we're exploring how manufacturers in Montreal can tap into sale-leaseback financing to free up cash tied up in their equipment. So, why sale-leaseback matters for Montreal manufacturers? Montreal has a competitive manufacturing scene. Whether you produce aerospace components, food products, or precision metal parts, up to 70% of your working capital can be locked inside your machinery. At the same time, new financing rates for equipment loans have climbed into 7 to 9% range, squeezing your cash flow. A sale leaseback structure lets you sell equipment you already own to a funder, receive an upfront cash payout, and then lease back the same machines at a lower rental rate, often 4 to 6%. This approach unlocks liquidity immediately, preserves your existing credit lines, and lets you reinvest directly into operations, staff training, or process improvements. By pinpointing your equipment and cash needs, you begin by creating a detailed inventory of your high value machines, such as CNC mills, injection molding presses, robotic welders, and other essential assets. For each piece, record its make, model, age, and current book of value. Next, you want to determine how much cash is required. If you plan to automate a finishing cell to boost throughput by 25%, you might need $500,000. If you simply want to smooth out cash flow fluctuations, $200,000 could be sufficient. Finally, consider your ideal leaseback term. Most agreements span 5 to 10 years, with annual payments tied to market rental rates, typically 6 to 8% of your asset's value. Not all lenders specialize in sale-leaseback for manufacturing equipment. Specialty sale-leaseback funds understand production cycles and structure payments and around seasonal output peaks. Some banks and credit unions also offer sale-leaseback options as part of their equipment finance services, usually with competitive rates but stricter rules. Finally, there's also brokers, like our team at Mehmi Financial Group, which presents your assets to multiple funders at once, helping you compare net proceeds, maintenance inclusions, and end of turn options. In a sector where half a day of downtime can cost thousands of dollars, many partners even bundle preventative maintenance plans into lease to keep your lines running. You want to craft a high impact proposal. A clear, concise proposal gets you funding faster. So preparing a asset schedule, listing by listing each machine, its age, purchase price, and current book value. You want to combine that with your last 2 years of audited financial statements, a year-to-date profit and loss, a 12-month cash flow forecast showing how you will deploy the sale leaseback proceeds. Then write a use of funds summary, such as we plan to use $500,000 in proceeds to automate our final inspection cell, reducing manual labor by 20% and increasing monthly output by 30%. Email this package in a single bookmarked PDF and set clear expectations. Can we review terms within 10 business days? So your funder knows your timeline. A friendly follow up call can oftentimes accelerate the whole process. So, key takeaways and next step. Sale leaseback financing transforms illiquid equipment into working capital without removing assets from your floor. Now, to get started, you want to inventory your machinery, calculate your cash requirement, and model an appropriate lease term. Shop specialty funds, traditional lenders, and broker groups to compare proceeds, rates, and service offerings. Finally, present a concise, data backed proposal that highlights how the funds will drive measurable productivity gains. If you like, you could use our free sale leaseback checklist or personalized guidance in Montreal. Visit mehmigroup.com. Our team at Mehmi Financial Group has helped dozens of Quebec manufacturers unlock millions in equipment financing. If you found today's episode helpful, please subscribe, leave a comment, or share your financing challenge. Thanks for listening.